There we go. So, we found out where our daily levels was, where we actually want to execute our trades. Then we found out where the market structure is, which direction the market is headed into, right? We never want to trade against the trend, always with the trend. And then last week we went over how to find the zone in the market where we actually want to execute our trades from, right? So today I want to piggyback off of that and actually show you guys exactly how and when to execute these trades when they've entered into our specific zones, right? So for those of you guys that missed the first couple of lessons here, we're just going to go over and just do a quick recap of how to actually find, the daily high in the market structure. And then we're going to get into the zone and how to execute in that zone. All right. So the first thing you want to do is with any market that you're trading, you want to come to the daily time frame chart, right? We're going to do a top-down analysis, start from the highest time frame, which is the daily time frame, to get an overall overview of what the market is actually doing, right? So how do we do that? We find, right, the nearest to price, right? You can see Bitcoin's price is right here, has a dotted line all the way across the screen. That's where the price is currently at. And we want to find the closest highs and lows to that price, right? So the daily high is the last up candle followed by a down candle that's closest to the price, right? So we see that right here. This is the closest one that's above price. And then you want to find the lowest one, or the daily low below the current price, right? So we find that is right there. Right now, since we found that, we'll drop down to the 4-hour time frame chart. And now we want to actually see is like which direction is, in this case, Bitcoin heading, right? Are we in an uptrend? Are we in a downtrend? And drop in the chat which trend you guys think that Bitcoin is currently in. Right, if we take a look at this, we want to look at closest to price as well, right? We don't want to worry about everything over here because this is all stuff that's already passed, right? We want to focus on closest to our daily level. So let me see in the chat what you guys are saying. Downtrend, currently down. See, in this case, we are actually still in an uptrend with Bitcoin. I'm going to explain that, right? So what we see here on the 4-hour time frame chart, we're going to pull out our text bubble, and we can clearly see that right here we had a lower low. This is the lowest point that the market made, and then back here we have a lower high, right? And then this high, is this high higher or lower than this lower high that we had previously? Right? It's a higher high, and then here we have a higher low. Because, right, let me move this up a little bit. This high that this low that we just created is higher than this low, but this high that we made here, right, the market actually broke above this previous high that we had and created a higher high. So in this case, we are in an uptrend, right? Hopefully that makes sense for everybody. Hopefully that's clear for you to see. And from there, now that we understand that we're in an uptrend on Bitcoin specifically, right, we want to take it down one more notch, one more time frame, and go down to the 1-hour level. Right now, what we're going to look for is our zone to trade in, right? Our zone to execute our trade idea, right? And how you can make this easier for you if you can identify, right, on the candlestick chart where each one of these candles, now we're on an hourly time frame chart, represents 1 hour of time, right? You want to look for the closest peaks to current price, right? The closest peaks, or the closest peaks, because we're in an uptrend, right? In this case, if you can't see where those peaks are, you can drop down to a line chart, right? So you can see those highs and lows a little bit more clearly. And in this case, right, one of my zones that we're going to mark up here, we can see that closest to price. In this area, we had a lot of support and resistance, right? We supported off of this high right here, this peak, supported again, then it broke below, it came resistance, right? In this case, right here, because that's the closest peak to current price, right? That's not too close to price. You don't want to squish the chart and go too close to where price is. This would be our closest peak, right? And because this area right here, once the market played above, you can see that we supported off of it again, right? It played a little bit higher, supported off it again, played higher, and then until we broke below, now it came resistance, but you can see we broke above again, and now we're going to look to react off of this zone, right? And when you're marking out your zones, you always want to find two areas, two zones for the market to come to, because in case this first zone that we have here gets broken through, like you see it did in the past here, right? You want to have another zone as a backup in case the market continues lower, right? We want to have two areas that we can execute. And in here, we can see that this peak is the next closest to price. So we're going to mark up that second area as well, right? Then you want to come in here and use a price label. And you always want to mark up using the quarter level theory, right? So what that means is when we actually have these price labels up, you can see there's a bunch of random numbers, right? 116,603.28. You want to put these price labels, right, at the quarter level theory, which is 25 or 0, 25, 50, 75, right? In this case, closest to 116,603 would be 116,600, right? And then in this case, for the other one, 117,073.02. We're just going to change that to 75, right? Oh, I don't know why that deleted, but I'm going to bring up another one here. Get the price label. Go like this. We had 575. Okay, so there, now we have our two zones that we're going to look to execute from. Right, so now what's the next step? Right, we want to actually take a trade in this area. Right, but how do we do that? Do we enter if the market just comes into our zone and, you know, like the market trades lower into our zone? Do we just execute right away? No, we want to wait for a reaction to happen in that zone, right, before we actually execute that trade, right? Otherwise, if we're not waiting for a reaction, this might just go lower and then react off of this zone, right? But we entered too early without the reaction, right? And now we had our stop loss get hit, right? And now we're wondering, why did we lose money, right? So what you want to do from the 1 hour time frame chart, after you found your zones, before you go down to the lower time frame, you want to actually find a candle that you can use as your zone, right? You want to use not from wick to wick on the candle. You want to go from body to body, right? So in this case, we're going to use this candle right here, right? We're going to mark that out with an arrow as well, just to show you guys which zone we use. That was this candle. And then in the lower zone, we're going to use this candle right here, right? If we're in a bullish environment, the market is bullish, we want to mark from the last bullish candle in our zone, right, from our area. And if we're in a downtrend, right, we're looking for sells, you want to mark up the bearish candle at the resistance, right? If you guys weren't on last week's session, you know, let me know. I'll send you the recording from that. But in this case, we're in an uptrend, so we're going to mark up the bullish candlesticks. Now that we have our zones, we want to drop down to the 15-minute chart, right? And this is where we're going to actually wait for our reaction to happen in the zone, right? How do we do that? What is the reaction? What does that mean, right? You're actually going to look for, if we're looking for buys in our zone, right, the market is bullish, we're going to actually look for a W reaction in our zone, right? We're going to wait for the market to enter our zone and give us two taps, two times where the market came into our entry, reacted out of it, and then we're going to look for an entry with the counter trend line, which I'm going to get into a little bit, right? If a market comes lower, We're going to wait for 2 taps into the zone and then wait for it to break out. Right? So how does that happen? How does that work? What do we look for? Right? We're actually going to go back a little bit to a trade that I executed this morning, which is actually right here. As you can see, Bitcoin came into this area earlier today. It was about 9 o'clock this morning, maybe 8:30. And we got a reaction, right, which was that W in our zone right here, right? The market came, traded lower into our zone, reacted higher, came down again, and then we broke out, right? If it's not clear for you, you can't see or you can't identify if there is a W on the 15-minute chart, you can actually drop down to the 5-minute and it makes it a little bit more clear. All right, in this case, we can see that we still have that W right here like this, right? Does everybody see that? Let me go to the chat here. Drop a yes in the chat if you can see that. Yes, these are all recorded for those of you that are asking. I will drop it in the chat again. Yeah, I can also send to you guys personally. But awesome. You guys can see that we had that W reaction from there. Right. So now what we do, once we see the W happen, right, there's something that we use called a counter trend line. Right. We're looking for buys, right? But the market is going to be bearish first coming into our zone, right? It's going to drop lower, enter into our zone, and then react out of it. So we want to draw a counter trend line. And how we do that is from the bearish wick that created our move into the zone, right? Which is this wick right here. This is where we had that start. And then we want to find another bearish wick to go off of right in the middle of the W to connect that counter trend line to, right? So just for visual purposes, I'm going to show you guys with arrows again, right? We used this candle right here. And then in this case, we use this candle right here. And we want to use the wick of those candles, right? We don't want to go straight to the body. Right now we're cutting through all these different candles right here. Right? We want to go from wick to wick. So it will look like that. Right, so now you ask yourself is, okay, now we have the counter trend line, we have the W. How does it actually work, or when do we actually get into the market? Right, so what you want to wait for is for the first candle that breaks or opens above this counter trend line and also closes above this counter trend line. Right, so in this case, we're going to circle this here. We had this blue candle right there, right, that opened above the counter trend line, right? This one here, the previous one, it opened below it, so we wouldn't have used that one. It opened and closed above the counter trend line, right? That's how we got our entry there. And let's say you missed this, right? You missed this open and close of this candle. You missed the entry here. And now you see price wicked up to 118,000 first, and then actually came lower again back to this area. This is actually what's called the retest, right? If you miss the first entry on the candle close or open and close above the counter trend line, you can actually wait for the market to react back at this level and then take a re-entry on this chart, right? So in this case, you can see the market moved higher, then it came lower, retested this area again, right? The break of that counter trend line, it retested it, and then we can see that Bitcoin actually went for over 1,000 pips in profit from that trade, right? So what it would look like if you're used to use your long or short position, if you got in from the first area, right, the candle open and close above the counter trend line, what you would now want to do is for your stop loss, you want to put it below the last leg of the W, right? This last area, the last wick that you can see on this bottom leg, the second leg of the W, the bottom of that, just underneath, is where you want to put your stop loss, right? And then what you want to do You want to zoom out a little bit, go back to the 15-minute time frame chart, the hourly time frame chart, whatever you want to do, and you want to attack for your first take profit, right? Because we want to have multiple take profits, areas where we can take profit from the market, because not everything is guaranteed to hit our, final take profit that we want to see, right? As in this case, we can see that Bitcoin reacted, gave us 1,000 pips in profit. It wasn't a full 3-to-1 risk to reward, and then it reversed and actually went and tapped into our second zone. Right? For some reason, the second zone is not there. Let's just go back to the hour quickly and mark that up again. Let's see, it was this candle right here. And we'll do something like that. That's where our second zone is. Right, we can see the market gave us a reaction from the first zone, broke above, and then dropped to the second one. So the reason why the first high is our first take profit, right, is so that we can take profits into our account, right? So that we're not waiting for take profit 3 to get hit or waiting for the 3-to-1. You can already take partial profits, close half of your position, and then wait for the rest of the trade that you have open to hit your next take profit level, right? So in this case, this high right here, you go to the wick, which is back here, you can see at 118,484. That's where we have our first take profit for a 1.6-to-1 risk to reward ratio there. And then the final take profit is at the next highs, right? So you can see in this case, the high right there would have been 119,271. And we can see that that is a 3.48 risk to reward ratio trade right there, right? Unfortunately, we didn't hit the last take profit, right, for a full 3-to-1 risk to reward trade. But if you would have taken profits on this trade, right, then and broke even, right, moved your stop loss to profit, right? Once you start taking profits and closing some of your positions, you can actually take your stop loss, move it higher into profit, like around here, right? So now if the market reverses against you, you already took half of your trade out, right? You closed half of your position. Your stop loss is now in profit, and now you're not losing that trade at all, right? You're still taking profits into your account, even though the market didn't go all the way to your take profit. It reacted, right? Gave you the perfect entry, went into profit, and then reversed on you, right? This will happen. The markets will do some crazy things, right? We had a big news event happen today at 12 p.m., right, at noon PST. This is why the market came and swept lower, right? It took out all these stop losses that were below here and below here, below here, and actually traded into our secondary zone, right? This will happen. The market will do some crazy things, right? There's news that we can't account for what's going to happen in the market, right? This is why when you see a trade that already reacts in your zone, right? When you see a trade that comes to your area, reacts, and you're a good amount in profit, like on Bitcoin, it was 1,000 pips in profit. Take some of that profit into your account, move your stop loss into profit, and then don't have to worry about losing that trade or the market reversing on you, right? You already set your parameters and took the profit into your account, right? In this case, when we actually came down to the second zone, as you can see, we're still on the 15-minute time frame chart, and we didn't actually get a reaction out of that zone, right? We didn't get our W in this area. We had the market touch once, and then it broke above, but it never came back to retest the zone again, right? So this secondary zone here would not have been a trade that we would look to execute on, right? We want to wait for the market to react in our zone, right? Show us that it's still supporting off of that area or resisting off of that area if we're selling, right? And that way, even though the market moved from this zone and went 2,000 pips in profit, right? Could you have taken a trade and made money? Yes, right? But with the trend trap strategy, we didn't get that reaction, and that means we're not going to take that trade because we're waiting for all of our parameters to hit before executing a trade, right? This right here as well, because we didn't get the reaction, yeah, we went into profit, but at the same time, what if we, just kind of played here, moved up a little bit, and then dropped lower, right? We didn't wait for our uh, strategy to fully play out. We didn't wait for the reaction in our zone. We just entered because, we thought it was a good time to enter. It went into our second zone, right? And then we lost because it went the other way, right? Sometimes the market will just react off of our zone and, take off from there. But in this case, we still wouldn't have wanted to take that trade for that specific currency, right? So now what we're going to do another one here, right? Drop a 2 in the chat if this is making sense, if this is clicking for you guys. Let me see. How do you determine your TP? We just went over that. Hopefully that made sense as well, right? Using the closest high to after your reaction, the closest high to that point is your first take profit. And then obviously we want to attack for a 3-to-1 risk to reward, right? But drop some currencies in the chat that you guys want me to take a look at, right? We're going to mark up some more charts and see what's going to happen, where we're going to look to react. What pairs do you guys like to trade? XAU always. Yeah, we can do some gold, NAS, and USD CAD. Let's do it. So we're going to start here. Oh, where's my wheel here? XAU USD. All right, let's clear this out. This is from a couple days ago. Remove all drawings. So on the daily time frame chart, right, where is our closest high or daily low to current price? All right, we're going to mark that up here together. In this case, our closest daily low to gold at the moment is right here, right? We can see that this was the down candle followed by an up candle, the closest one to price, that's also below price. And then the closest daily high on gold is actually right here, right? We can see that we have a bullish candle followed by a bearish candle, and now price is currently here. This is the closest daily high to gold at the moment. All right, so now let's drop down to the 4-hour chart and see which trend are we currently in. Right? Drop in the chat which trend you guys think that we are in for gold at the moment. Let me go see, open up the chart here. Bearish, down, down. Awesome. So we are, in fact, in a downtrend. Right? And if it's not making sense to you yet, right, I'll explain why. Right, back here, we're just going to go back a few more times. But what you want to do is you want to mark up the 3 closest highs and lows to current price. But just to kind of go back a little bit and explain why we're in a downtrend, for this to make sense for you guys, we're going to go back a little bit. All right, so here we have our lower low. This was the lowest point that the market made before, right, going into this uptrend, and then we peaked up here, right? So from here, we made a high, a higher high, because this high back here is higher than this one. Then we made a higher low, right? And is this high higher than this previous higher high? Yes, right? So we have another higher high. Then we have a second higher low, right? We have another higher high. And then is this low right here lower than this previous higher low? Drop in the chat. I want to see if this is making sense for you guys. Is this low lower than this previous higher low? Let's see what you guys are saying here. Yes, 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 exactly. Right, so in this case, we have now a lower low. Right, so that's why we are now in a downtrend, is because, right, the low that we previously had did not hold, and gold broke below it and created a new lower low. Right, so now since we identified we're in an uptrend, we want to go down to the 1-hour time frame chart. And now what we want to do is we want to look for our zone, right? In this case, in a bearish environment, we want to look for resistance areas, right? Or valleys in another term. And how do we identify that, right? If it's not making sense and you can't clearly see what's happening on the candlestick chart, again, go to the line chart. Right now, where is the valley, right? Just for you guys to kind of get a visual, we're going to go up here. A peak is obviously like this. Like think of it as like the peak of a mountain. And then the valley is like a V because we're in the bottom of the valley, right? The bottom of the mountain, and the peak is at the top, right? So now that we have that figured out, we go back here and we look where is the closest valley, right, in this chart. So let's take our rectangle again, and we can see we had a valley here, right? We had a valley here closest to price. We had some valleys up here as well. But which one is the market reacting off of, right, more frequently? We can see here we had some peaks, right? In this case, there was resistance because the market played below this area, played all the way up here, came back down, actually reacted again, supported, and then back here, we supported one more time. So this area has multiple touches in the zone, right? So this would be an area that we would call our valley, right? The closest valley to current price. And then what's the secondary zone that we want to look for? The second valley, or the second area where the market can resist off of, right? So in this case, we see up here, we also created a peak. We zoom this across, we can see the market supported off of here and created a valley, right, and a second time. Then here we broke a little bit below, but still use that as support. And then back here, again, support a couple times, and then we actually resisted off of this area again. So we're going to mark up this area like this, right? Those are our two areas, right? We have our first valley here, second valley here. Now we're going to go back to candlestick chart and look for our candle that we're actually going to create our zone from. All right, let's just drag this out a little bit. This as well. And in here, what I actually want to do is use this candle right here, right? That's the candle that we're going to use as our zone. And then in this case, right, because this candle is so big, we don't want to have our zone, a massive zone that's from here to here is like 250 pips on gold, right? What we actually want to do is we can use a candle that's in here, right? That's a little bit closer to this area, to this valley. That's not a massive candle that's 200 pips, right? So we can take this, move this higher a little bit, and we are actually going to use, in this case, I'm going to put it from up here, this bearish candle right there, right? So we can see those are our two zones that we have. Now we're going to zoom out a little bit here. Make sure we go from body to body, right? And then this one as well is already from body to body. So now we have our two zones that we're going to look for the market to react from, right? Now what's the next step? We get our price label. Put this down here and then down here, right? Now, where do we put this, right? What is the quarter level theory? Where do we put our entry, right? In this case, 3312.463. We can use 3312.5, right? A quarter level, 0, 25, 50, 75. And then in this case, again, we can use 25 in this case, 0.25, right? Closest quarter level to our current zone. So now what's the next step, right? Do we want to wait for the market to come into our zone like this, right? Just trade, 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 come into our zone and just drop off like that and enter as soon as it comes in here, right? No. This is where we now are waiting for the market to come to our zone and react off of it, right? going to come up here again so you guys can see this. In a bullish environment, if the market is bullish, right, we're consistently making higher highs and higher lows, right? The market is trending up like this. We are waiting for the market to come to our specific zone. Let's say it's right here. And we're waiting for the market to come down and create a W, 2 touches in our zone. And then we have our counter trend line. In a bearish environment, right, if the market is trending lower, right, making lower lows and lower highs, we want to wait for the market to come to our zone and give us a reaction in an M formation with now the counter trend line going like this, right? From a red wick or a bearish wick to a bearish wick, right? In a bullish environment, we're waiting for it to come from a bearish wick or from a bearish wick to bearish wick in a bullish environment. In a bearish environment, we want a bullish candlestick wick to a bullish wick. Right? Does that make sense? Drop a 1 in the chat if that makes sense. I see some ones. Awesome, awesome, awesome. So now, right, these are our zones. If you guys want to take a picture of this and wait to see how the market reacts from these areas, feel free to take a picture, take a screenshot, right? So you can mark up these zones. Candles that we actually used, right? And let's go to the next chart that was suggested, which was NASDAQ. Now we go to the daily time frame chart again, right? In this case, right, NAS is kind of in a little bit of an interesting scenario. If we zoom out a little bit to the weekly time frame, we can see that NAS actually hasn't been at this level ever in history, right? We can go back for weeks, like back here, we're in 2015 when it was at like $4,000, right? In this case, what I want to see on the daily time frame is I want to let NAS actually play out a little bit, right? Because we have nothing to go off of, right? If the market is just continuously going higher and higher, right, we don't have anything or a daily high to kind of mark up, right? We just have a daily low. So in this case, yes, we're looking for buys, but we don't know what our range is, right? In this case, NAS could just keep going higher and higher and higher, then eventually just completely drop off like that, right? Until we have a daily high and a daily low, right? If we go to the daily time frame, this is on the weekly, but on the daily time frame, we don't have that, right? Because we're just continuously making highs. We just want to wait and let the market develop and show us what it wants to do, right? Wait for it to show us the daily level that we're going to trade within. All right. Does that make sense? Drop a 2 in the chat if that makes sense. Let me see here. 2, 2, 2, 2. Awesome. So now the last currency, what was it? USD CAD, I believe it was. Let me just check the chat. USD CAD. Let's take a look. So USD CAD, where are we at right now? Let's just take all of these drawings off. And now we're looking for daily highs and lows, right? We use this handy dandy tool, and we can see the closest high to current price where we're at is actually back here, right? A bullish candle followed by a bearish candle that is above current price. That's what we want to see. And then our daily low is a bearish candle followed by a bullish candle closest to price, which is this one down here, right? That's our range, our zone where we're going to look to execute trades. Now let's go to the 4-hour time frame chart. Drop again in the chat. Which direction do you think this is going in? Are we in an uptrend or are we in a downtrend? Let's see here what you guys are saying. We are in an uptrend. Correct. Right. And when you guys are marking up these charts as well, like get in the habit of marking up these areas, right? Marking out your lower lows, marking up your higher highs, your higher lows. Right here, we have another higher high. Get in the habit, get into the routine of marking out these things so you can actually see, right? Am I right? Are we in an uptrend? Are we in a downtrend? Right? Sometimes you'll look at a chart and it might be a little bit confusing. You won't understand if we're in an uptrend or a downtrend, right? So this is why you mark these things out, right? You help yourself, help your eyes to see, okay, we have a low here. We made a high, we made a higher low than the previous one, and then again made a higher high. Right? So now let's go to the 1 hour chart and see what we have here. All right, we're going to look for our closest peak to current price, right? Where the market can react off of our zone. If we don't see that, right, we can't see where that peak is. Again, we go to the line chart, right? It makes things a little bit easier for us, right? We can see that closest to price, that's not too close, right? In this case, this area is a little bit too close to price, right? We're going to go to the next one, which would be right here. And in this case, I'm not going to go back too far, but if we zoom this out a little bit, you can see in the past that the market did respect and react off of this area, this zone right here, right? You can see we had another peak that was made right here in our zone, right? We kind of supported off of it back here, supported off it back here again. So we have multiple touches in the zone, but we're just going to mark out closest to price. And then from there, what we can do is find another peak, which is right here, right? Multiple touches in the zone. Gives us a little bit of space between the first zone and the second zone. And now we can go to the candlestick chart again and find which candle are we going to use as our zone, right? Which area are we going to look to react off of, right? In this case, again, we don't want the candle too big, right? In this case, here on this lower one, we have this huge candle, right, that created this zone that we have that peak from. But where is a candle that we can use, right, that's close to it, that's going to be our zone, right? We have this candle right here. It's not too big. It's not too small. It's this candle right here, right? That's our zone, our secondary zone on this chart. And then the first one, right, we can actually move this a little bit lower just because, again, we just have huge candles here, right? This is, if we use a measuring tool, like this candle is 11 pips on the currency, like USD CAD, that's quite a lot, right? And then if we go to this other one, you can see that that's quite amount of pips for that candle. So we're going to use this candle right in here, right? That we actually came and used that as support as well and resistance, right? So that's our two zones. So now what do we do? Right? Drop in the chat. We have our zones, we have our candles, right? Let me put another arrow here as well, right here. Now, what is the next thing that we do? We have our zones. What do we do? Drop in the chat. See if you guys were paying attention. Wait for a double touch, a W. Even before that, there's one step before that. It still has to do with our zone. All right, what we want to do is put a price label. Right, we want to see which area in this market, what's the price that we're actually going to look to react off of. Right, because the market reacts using the quarter level theory. So in this case, we have 1.37387. We're going to round this down to 75. And in this case, we are going to round this down to 25. Right now we have our zone that we're going to look for a reaction from. Right now we go down to the 15-minute time frame, and then exactly like Jeremy said, we want to wait for the market to come down, right? Do its thing, wait, and then give us the reaction, in this case, a W, right? So we can draw our counter trend line, wait for the market to give us two reactions in that zone, and then break out. We draw the counter trend line and we enter right there, right? Does that make sense? Drop a 1 in the chat, drop a yes if that's making sense. I love it. Awesome. Awesome. I'm glad this is making sense. Let's take a look at one more pair just to help you guys see this a little bit more. We are going to, let's see what we have here. Let's take a look at AUDJPY. Let's go to the daily time frame. And then let's actually clear all of this. Just do one more walkthrough. Closest daily high and daily low is always step one, right? We want to know the range that we're trading in. And since this daily low, this used to be our daily low, but we got traded through, right? We want to actually use this closest one to the price as our daily low. And then the closest high, we can use this one back here. Now we have our daily high and our daily low. We have the range that we want to look to trade in. We'll go to the 4-hour chart. Now, which direction, which trend are we in right now? Let me see if you guys can figure this out here. Are we in an uptrend or are we in a downtrend? Drop it in the chat. This one's a little bit trickier. Let's take a look here. Joey says up. Do you guys agree with Joey? Jeremy says down. Up, 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 and down. We're actually in an uptrend, right? Reason being is we can mark up the 3 closest highs and lows to current price, right? We have a lower high right here, right? Here we have a higher low because this low is still higher than this one, right? This would have been our lower low. And then from this higher low, we actually created a higher high, right? And now we're kind of in this area waiting to see what's going to happen, right? So we are in an uptrend, right? The market currently has not broken below this previous higher low. So we're still in an uptrend. If this ends up trading through this low and goes lower, now we are in a downtrend. We're going to look for the market to come back up and react for sells, right? But because we haven't broken that yet, we are still in an uptrend, right? So what we're going to do is look for our peaks, right? Go back down to the line chart. Where do we have peaks closest to current price? Number one, I can see we have some peaks here, right? We have some peaks here, but do we want to use these because they're right basically near price? No, right? We want to go a little bit lower. Then we have our zone right here, right? And then we can use this previous one back here, right? It is lower than the higher low, but we are still in an uptrend, so we don't want to trade against the trend, right? Now we're going to look on the candlestick chart and find a candle that's in our zone that we're going to use as our zone. Right? In this case, we can use this candle right here. Right? Mark it out with an arrow, which is this one, and then go down to the second zone. We actually have a little bit of a smaller zone, but it's still good. Right? It's not too small and it's not too big. So we're going to use this candle right here. And now we have our zone, right? What do we want to do? Again, price label right here. This one's actually perfect, 95.775, right? Quarter level theory. And then this one, we can actually change this to 95.325, right? Using quarter level theory again, those are our two zones that we're going to use and wait for the market to react off of, right? If these two levels fail to hold, right, because this is our stronger lower low, because we actually used this previous high to support off of there, right? We're going to wait for this low to get broken. If it plays lower, now we're going to look for sells in this market. But until we do break below those lows, we're still in an uptrend looking for buys. All right, now we go to the 15-minute chart, and then we wait for our reaction, right? Now we wait for the market to come into our zone, react, and break above, right? This is about the reaction. We want to wait for the market to come to the area, react, give us 2 times where the market entered into the zone because we're in an uptrend. We're looking for the W, right? And then mark our counter trend line once that opportunity arises and then enter for buys, right? Hopefully that made sense for you guys, right? I know we're a little bit over the hour. I know we started a little bit later as well, but that's what I have for you guys today, right? We want to wait for the market to react, right? Give us that M or W in the zone, right? If we don't see that happening, right? We don't see the reaction, we're not going to want to enter that trade, right? Because there's certain things that happen in the market where it just goes through our entry zones, right? It doesn't give us the reaction. It just continues through the zone, but we enter anyways because we think that that's our zone, right? We have to enter in that zone. Until you see the reaction, until the market tells you, I'm ready to continue to go higher or lower, then you want to enter once you see those things happening, right? You see the plan falling into place, right? But I hope you guys all got some value. I hope you guys all learned something today. Go and drop in the family chat your biggest takeaway as well. And also, if you need the recordings from the last 2 sessions that we did, finding your daily levels and market structure, and then also finding your zone, right? Shoot me a text. I'll send those to you guys. I want to make sure you guys have all the information that you guys need to be successful using the trend trap strategy, right? And I hope you guys all have an amazing Wednesday night. We'll see you guys all next week on Tuesday for the regular session. Peace.